Hi, Vincent from 888 US Real Estate. We've had a lot of calls over the last couple of weeks from some of our buyers who are very concerned about the Australian dollar falling below the US $1 mark. Now this is of particular concern because they're thinking they missed the boat. But I'm saying to them really that you've got to get this in perspective, and they're thinking that the glass is half empty and that they've missed out, but actually it's more than half full, which we'll see in a minute. Our dollar started this little roller coaster back in 2009 when it was coming off 61 cents, and in the space of 3 months it went to over 90 cents, and that was a trigger for us to get involved in the US market immediately because we saw such great value. Now in 2011 we hit a market high of $1.10 against the US currency, and we've been hovering around that $1.06 to a dollar level for the last year almost. So sitting somewhere below a dollar is suddenly a panic, but when you look at it in the big perspective of things, it's no big deal at all. The fact that we've got lower interest rates in Australia driving our dollar down lower means that we've got a trend where the US currency is gaining strength and the Aussie dollar is losing strength. So you actually want to have more money in America and be moving money over to America in order to get on that trend. It's a good thing because now we know where we're going. We know we're not going to be pushing up any higher, and that what's really looking more likely to most currency and analysts is that we're going to be going down. Now there's a psychological tendency which we call the glass half empty syndrome. It's where you're sitting around waiting to get into a market and it's moving away from you, and you're looking back thinking, oh dear, look at that, it used to be a lot cheaper or a lot better back then, and God, I regret not getting back in. Maybe it'll come back in my direction. But what actually happens when you've got a trend is things keep moving away. And I'll just illustrate this in terms of the Australian dollar now. If I fill up this glass with this delightful Australian wine, there we go, we've got a full glass there. That's the market high at $1.10. And what I'm going to do is enjoy about 12 cents worth of Australian dollar action. If you pick the high, this is what you would have already enjoyed. It's hard to stop at that much, but there we go. There's what's happened so far. At the bottom we've got 62 cents at the very bottom there and $1.10 at the top. So there's that 98 cents. You can see there's a lot left in that glass yet to drink. Now we'll put this in perspective in terms of property prices, because we're also getting some people very concerned about property prices as well. Now in this little reference we're saying that the top of the glass is the market low. Very hard to pick. So in Atlanta on good quality property, new constructed stuff that we're moving now, we'll say that's about $50,000 because that's about the bottom for those good properties. Now the market's moved a little bit now, and they've come up and they're now about 90,000. So I'm just going to drink off that $40,000 worth of wine here. God, we've done a lot of takes. Now, just to be intelligible here, down here at the bottom we've got 150,000, which is the replacement cost of that home if you were going to build it again today. So you can see from the top of the bottom of the market, we've drunk off $40,000 of the possible full amount that's left there. So you can see even with property prices now in the Atlanta market, there's plenty of room left for growth. Now what we're going to do now is put together this into an example and show you what can happen in, I don't know, maybe 3 years from now when we look at the rapidly rising prices in Atlanta, where we've got the Aussie dollar falling against the US currency, and also we're going to leverage our money by 50% using a low doc loan. which are really simple to get in the market today. So what we're going to do in this example is we're going to take this property here at 4488 Joseph Drive in Snellville in Atlanta. It's a 1990 built home, fully renovated. It's on the market now for a little bit over $86,000, very close to our $90,000 we're using in our example. If we look at the market low for this property, it was listed as a foreclosure for $50,000, so it's bang on the money there. And if we go back to 2007, which was the market high, this property sold for $146,000. So it's a really good model for us to look at. So with 50% finance, we only need $53,000 of cash to buy the property. The rest of it comes through our low doc loan from the lender. And here's how it's going to look over the next few years, probably about 3 years to get back to its market high at the rate Atlanta's going. If we look at the capital growth over that period, we're talking about $60,000. Now it's got a net yield of a bit over 10%, so our income over 3 years will be $16,695, which comes to a total increase of value, including your income, of $76,695. Now because that's leveraged and we've got only $53,000 down, you know, that becomes more than 100% on our money just in there. Now what we're also going to do is factor in the currency growth because of the falling Australian dollar, and we're going to assume that our dollar goes from 98 cents down to 78, not to the absolute bottom of 62 within that 3-year period. So you're going to get that factored into the equation as well. And with our leverage and everything all done, it looks like we're going to get 186% back on our money over 3 years on this property. Now, we can rest pretty assured that, you know, that's the sort of numbers that we're going at, because at $146,000, this property is pretty close to its replacement value just for the building, let alone the land and anything else involved. So for anyone interested in moving towards Atlanta or entering the market now, there's still a lot on the table. Now those glass half empty people that are sitting around going, well, should I get the market or not? If they wait for 3 years, they'll be holding their glass and they'll be filling it up with tears. Now if you're really interested in moving in this direction, and I fully reckon that you should, I've got all my money committed, then there's 3 easy steps that you can do. Number one is go to our website and have a look at the great properties that are on there. We see hundreds of properties every week, and we just pick out the best deals that we can find that are delivered absolutely perfectly by the vendors. We've got great property management in place. Pick a property. Then email us or call us to reserve it, and we will hold that property off market while you go about and organise due diligence. We help you with every step along the way. The third thing you do is just follow our instructions, because Simon in our office, he will just tell you exactly what you have to do: set up bank accounts, open LLCs, get the building inspection, negotiate the contracts, everything right through to property management and bringing the money back to Australia. We've all got covered. It's pretty easy when you've got help, and we've been down this path over 550 times with clients already, so we've got the confidence and the experience to really help you out. So get in touch with 888 US Real Estate. We can really help you make a lot of money now. The momentum is surging, the glass is more than half full, so please get into the market.